Good morning, everybody who is not on the East Coast. If you're on the East Coast, then good afternoon. But welcome. Looking forward to our session today. Gib, thank you for my audio and visual check. I appreciate that. Good morning, Randall, and everybody else. Really excited, as always, to be here. I apologize for being just a few minutes late, but always looking forward to this this session and the discussion that we get to have as a group. Hopefully we'll get a few more coming in as we get things rolling. As always, I just ask you to manage your microphone settings for me. I've unmuted everybody in the GoToWebinar software on my side, and want to invite as much open discussion and participation as possible. That way we can have a live discussion and go over not only some of the open positions that I'm looking at and think about what the market is doing with them and whether or not we need to, some adjustments are appropriate. You may have some of those same ones. We may have an opportunity to open things up to some of the things that you're interested in as well. So with that said, how's everybody doing?
I'm doing fine. Are you doing all right?
I'm doing very well. Thank you very much. I appreciate that. Looking forward to not just this weekend, but actually next week. It's my granddaughter's birthday, and so we're following my daughter-in-law's instructions to help her get everything set up and prepared. It's going to be fun. So.
Yeah, being 4th of July, I imagine it'll be a big week.
Yeah, she was born on the 2nd, and then we have the 4th coming right after that, and then her mother's birthday is the next week. So July's a busy month for us here, which is kind of fun. So Gab says he's doing okay. Good. Well, let's go ahead and dive in and get things rolling. As always, we are looking at the market while it's open. It is expiration Friday for weekly options. And that means that there's always things that we can look at and try to evaluate. Sometimes some of the trades that I've written about on the ITG site, excuse me, that I've posted in the blog are up for expiration. I do have one of those positions today to look at, but as always, there's always open positions as well to consider against the backdrop of overall market movement and conditions and sentiment and all the rest of those things, and try to evaluate what can be or should be done with them. So let's go ahead and get straight to that. The position that is up for expiration today is put sell that I wrote about in the on the site in at the beginning of the month. This is about a 3-week trade on Comcast. Sold the $39 put and brought in a little over 1.5% for that time. So 65 cents was the premium that I was able to bring in. So let's take a look at that stock and see where things sit right now. It's picked up a little bit of momentum today. When I looked at it this morning, it was right around 38. Now it's pushing up just a little bit below 39. Now that's interesting because all things being equal, if the stock stays pretty much where it is today, it looks like I'm going to take an assignment really near to the strike price that I sold. So it'd just be a little bit out of the money, and looks like, and if the stock can kind of hold that pattern, that means that next week there may be an opportunity to do what I like with stocks I own when I have an opportunity, and that's to sell a covered call. At the same time, with it below there, again, there's a chance. It's looking like I could be assigned here. This does open up, kind of the opportunity to think about whether or not managing the trade a little bit more actively. I guess I need to type these right. There we go. Whether or not an opportunity to manage the trade a little bit differently is appropriate. So let's go ahead and switch over here to the options. for Comcast. And this is the contract that I'm working with right now. Again, I brought in 65 cents on this. On the put sale. And if I wanted to buy it back right now, avoid the assignment, the asking price here is 20 cents, about 7 cents between the bid and the ask. So if I wanted to play with that a little bit, I could try to maximize the premium I keep a little bit. But if I didn't want to, I just wanted to go ahead and move on. That's certainly, something to consider. And it would mean I'd have to pay 20 cents per share in that case. So give me just a second. That means that my net all right, give me a second. All right then. Okay, there we go. It's having some cursor problems for a second. There we go. So I sold it for 65 cents. If I bought it back now, it cost me 20 cents. So I'd be able to hang on to 45 of the original 65 and make it still a little bit over 1% for the 3 weeks. And that would ensure that I would avoid the assignment, and my $3,900 only sold one contract would come back to me. Gib, looks like you've already got an opinion here, which is great. Get out, that's a roughly 66% gain, and there's no assignment, right? So that is not a bad choice. Let's consider that though against the backdrop of what you might be able to do with the capital if you wanted to keep working with the same stock. So here's 7 days out. 38.50 is the at the money strike price right now. Well, excuse me, I take that back. 39 is the at the money, but it's a little bit in the money. So if I wanted to stay out of the money, here's 36 for 38.50, staying a little bit more conservative, a little less than 1% for 7 days. That's not horrible. If I go to 14 days, here's 55 cents. That's a little under 1.5% for 2 weeks. That's interesting, right? And if I go out a full 3 weeks, then I can get a little bit over what I sold my original put option for. So that's interesting as well. Barry says it would cost you about 51 cents in all, considering the ex-dividend coming up. Yes, and thank you. I appreciate you bringing that up. And this is actually, I appreciate that's a really good point, Barry. And this is actually one of the reasons that I'm not opposed to taking the assignment at 39. The fact that it is this close to 39 makes it a little bit easier, of course, but the fact that this stock is getting ready to declare its dividend right here on July 23rd, so it's about 3 weeks out. Excuse me just a moment. Okay, sorry about that. If you heard a dog in the background, I apologize. That's ours. Well, he's a dog. All right. So it is going ex-dividend, and that is a reason for me to be okay with taking the assignment as usual. And so the dividend itself, sorry, that was looked at the wrong one. That was July. So it's going ex-dividend on Wednesday. So, and that's 31 cents, which I like. And so to me, there's a larger opportunity here. I'll be just, again, this isn't a recommendation to buy or sell. You can take or leave it. If, for example, Gib, you like the idea of getting out, that's fine. I think the opportunity here to take the assignment, very possibly Monday, Tuesday, well, not Tuesday. Yes, Tuesday. Sorry, that's my granddaughter's birthday, not July 4th. July 4th is next Thursday. Monday or Tuesday, looking at an opportunity to sell a covered call, which would be really, really nice. And then there's the ex-dividend date on the 3rd, and which is payable on the 24th. So there's an opportunity here. I already have one premium. There's an opportunity to pay myself another dividend with the covered call, and then take in the dividend on the X date. And I don't have to be holding the stock on the 24th, right? If I have an opportunity to sell covered call for a shorter time period than that, and I get called out and I sell the stock, that's great too. And then I still have that dividend coming in. It's really just about, for me anyway, being able to be a shareholder of record on the 3rd. So, other thoughts? Okay, let's go ahead and move on. That's Comcast. As it stands, I'm going to go ahead and let this play out. If it's high for the day, also it's worth noting is above 39. So if it picks up its bullish momentum again and starts to rally in the next couple of hours, it's also possible I may not be assigned, and that would mean that I don't get the dividend, right? But that's okay too. Then I can decide if I want to do something again with Comcast or move on. So, all right. Now the week after that, sorry, next week I should say, day after the 4th of July, I have a put sale on CVS. There's the next up in line. And I sold the $59 strike on this one, brought in about 2%. Nice trading price of $1.20 on this one. And so that was pretty attractive trade. Let's check in on CVS and see where things stand there. So stock was rallying a bit up into this area when and it was starting to establish this consolidation range when I sold the put option on this. But over the last few days, over the last few days, we've seen bearish activity really pick up, including there's a gap right here. Let's zoom in. Let's get a little bit closer view here. A little bit of a gap yesterday that pushed the stock lower. And then it's rebounding up here again. It's a little bit above 59 as of now. So all things being equal, if it holds up for the next week, it looks like that could expire. Anybody have an explanation for the 3 days prior? What do you think? This is a gap from about $60, a little bit above that where it closed on Wednesday. Gibbs says the debate. I don't think that had to do with the gap, to be honest, Gib, although I do think it's an influence on the market in the broadest sense. It opened a little bit above 58. So we've got about a $2 gap here on an overnight basis on Wednesday. In this case, I think this really looks to me like a sympathy move, and you're going to have to bear with me for a minute because I'm going to have to take out the ugly stick. And excuse me, here's Walgreens. Just in the interest of transparency, you know, this is, as many of you already know, it's a stock I've held for a while, and the market really punished the stock after its latest earnings report. It revised some of its company revised some of their forward-looking guidance, and this is, you know, just a stock that's been extending a long-term downward trend. And I got into this stock. Let me go back and just make sure that I'm not talking out the side of my mouth. Yep, this is it. Got into this at the beginning of 2022 at $49. And so I've been watching this go down ever since. Yep, been watching it go down ever since. And so it's, you know, kind of tough to watch this, and it really looks like it's extending that downward trend, and momentum here is really, really very bearish. It's going to be interesting to look at these financials and see if they're as bad as the market is taking it to be, as bad as the headlines thought it was, or made it sound. Barry, I thought it was bad being in on it at 17. I've held on to this because, like CVS, I think Walgreens they're investing very aggressively to not just in pharmacy, but in transforming their business model. And a lot of market sentiment has been shifting against and taking a dim view of some of the prospects of what CVS and Walgreens are doing in trying to expand not only to pharmacy, but also providing clinical and primary care services attached to their pharmacies. But those are things that I believe are going to be that are really going to prove to be transformative in terms of not only the way that their business is run, but also some of the things, the convenience of healthcare service in and of itself. And so I believe, and I still do, that the long-term prospects are still pretty healthy. The market has been strongly disagreeing. Didn't they recently sell off the Boots portion of its? Barry, that was a few years ago. Yeah, they did sell off the Boots side, but they kept the name. So, but this is the reason I believe that CVS gapped down, and it clearly is picking back up as people are realizing, oh wait, different businesses, CVS maybe in a little bit different tier here, so they're recovering a bit. This is looking pretty nice as it stands. So again, with about a week to expiration on this one, you know, we certainly don't have to wait until the day of to think about what to do with a position. Remember I brought in $1.20 on this one. And it looks like the asking price on the 59, well, let's get to the right. Let's get to the right expiration, shall we? There we go. So that's interesting. So I originally brought in $1.20 when I sold. So that's positive. If I wanted to buy this back, I'd have to pay 58 cents. I'd keep about 50%, which a lot of rollers are going to be very okay with that, right? If our friend Joe was here, he would say, if you can take 50% or more, then you should go ahead and do that. That's a nice opportunity with the stock. He would also point out, this is still picking up bearish momentum. That's the overall pattern here is still, even with this recent rally, the pattern here is still pretty bearish, and it looks like it's moving along this downward trend line more than it's rallying. And so, he would certainly argue, I believe, in favor of going ahead and rolling this one. For myself, to be honest, the next question, of course, is always, what are you going to do with what are you going to do with it next? And so, you could buy it back, and then this might be interesting. Sell the 59 for 86 cents for the next week after that. If you still like it, that could be interesting. 1 month is interesting as well. You could go out as far as, you could go really conservative, go out another month and still get 81 cents. Three weeks, 58 gets 78. That's not quite to the level that we want. $1.15 for a 59. So a couple of ways you could work with CVS right now if you wanted to. And those wouldn't be terrible choices. That pretty much just staying at it looks like staying right around the $59 strike would be the most attractive. Any other thoughts, opinions, other variations? All right. I'm going to go ahead and let this one I'm going to wait and see what happens next week. We've got a day of nothing on Thursday, right? Market's going to be closed, and so we'll still get a day of time decay while the market isn't doing anything. So the 3 days leading up to the holiday are going to be interesting. So maybe an opportunity to leverage that a little bit more, possibly if you still want to think about rolling and the stock is being pretty stable, then there's a chance you'll be able to hang on to even more premium. So we'll see. All right. Up to the top of my chart here, and now we're talking about some more recent ones. This is last week's put sale on Tyson. The next couple here, we're not looking to for expirations out until excuse me, the 19th of July. So a little bit further out, and that means that the stock, if you are looking for an opportunity to manage the trade actively, that usually means that the stock needs to have moved in your favor pretty aggressively. And it looks like that's not the case with Tyson right now. Got it pulling back over the last few days. It had rallied pretty strongly going into the week, right? And I sold the 55 brought in about 90 cents on this. So this was a good trade, and we're still above that level with the 20-day moving average sitting right at around 56. Right here. So this looks like it should provide pretty solid support right now. That is about $1.50 away from the strike price that I sold. So let's go ahead and take a look at it. Maybe that's far enough to open up some possibilities. We're 3 weeks to expiration. Again, I brought in 90 cents on this one. I could buy it back for 40. Again, more than 50%. If you didn't want to monkey around with waiting for the market to come to you. Plenty of open interest, even though there's no volume. That means that there's a really good chance that if you set a reasonable sell to close price, 35, maybe even 33, it should probably be taken pretty quickly. Again, I sold one contract on this. That's about $5,600. Again, freeing up capital. And it's always nice to be able to increase your cash, right? Whether that means closing out a stock that you're holding, or whether that means closing out a put sale without an assignment. And that's one of the reasons that I know a lot of people like to work with these trades on a more active basis, because taking an assignment maybe is a little bit less attractive. And so if you've got an opportunity to close this out, buy it back sooner, free up that capital and move on, even and hang on to 50% or more of the premium that you brought in, then a lot of people are going to be, a lot of people are happy with that. And I get it. That's actually a nice result. For this one, being able to hang on to 50 cents of the premium that I brought in by buying this back at 40 on Tyson, this would, that's a little bit less than 1%, but that is all. This is also a trade that I've only held for a little over a week. So if you annualize that result, in practical terms, there's 50 cents divided by 55. Okay, that's 9%, and I've held it for about 10 days. That means, roughly, doing the math in my head, I'm getting the opportunity to place about 36 trades, right? You divide the 10 days into 365, so it's about 36 trades. So I multiply this by 36. If I can keep doing that, I know our friend Ray that just jumped in really likes it when he can when he's got an opportunity to make about 30% per year on an annualized basis off of these trades. And so that
That's
how you doing, Ray? Yep.
Good. Yeah.
Yes. So this would hit that minimum. That's just thinking about taking a little bit more active approach to managing it. It's still 3 weeks to expiration, and it's giving that opportunity. I don't know. For a lot of people, that's hard to pass up. Barry says, Tyson's been a good trade for me the last couple of months. Made 3 trades since May 3rd and have brought in around $2.90. So again, there's Tyson has been a good mover for sure. And this is, we've had a little bit of volatility, right? From 61 down to 55. But that's also why some of the premiums on this one are pretty nice. And so, we'll see. We'll see. For now, it is still sitting nicely above this, and I'm okay leaving this. Yes, it is possible to buy this back right now, but you know, I'd probably have to go to 56 to get 70 cents. Think about whether or not I'm willing to go a little bit aggressive. 56.70, the 57 is a little bit in the money. I could get $1.15. Now, if I'm trying to leverage, if I'm trying to leverage price action, and I'm bullish on the stock, $1.15 might be interesting. The stock's only 30 cents away from that price right now, right? And this is pretty positive. If we do get a bounce here at 56, like I was talking about, then what's happening right now is just a typical little pullback with a bounce expected to come at some point. And so if I were to buy this back, extend the trade out another week, go out to the end of July on this with this $1.15, and you get that bounce at all, there's a really, really good chance that you'll get another opportunity to buy it back with another 50% gain on the premium that you brought in. Again, that's assuming that that it gets that bounce and bullish momentum picks up again. So no guarantees, obviously not a recommendation. Keep my coward's door swinging, all those kinds of things, but that might be interesting. I don't know. I'm going to hold on to the trade that I've got and see what happens, and let it play out for a little bit longer. So did have a couple of new trades this week, of course. Suncor selling the $37 strike price for, again, 3 weeks of time out, also on the 19th. And then a covered call on Zion that gave a nice premium here, but with the stock and banking stocks generally not doing so hot. Well, I take that back. Today it's rallying nicely. Kind of faded back a bit, but we're picking up quite a bit of momentum here. So we'll see what happens. Looks like there's an opportunity where I might be called out of this before the 19th if it keeps showing this kind of bullish momentum. It's lifting off a little bit. And excuse me, Gib, I kind of, when it comes to banking stocks, I think the debate might be a little bit more of an influence in these cases. Politics aside, just thinking about previous, thinking about the contrast between Mr. Trump and President Biden. I guess I should say President Trump as well, since he's the former. Between the two gentlemen, is President Biden has certainly mostly left the Fed alone and not really gotten too involved in the discussion about interest rates, those kinds of things. Left that to his cabinet and to the excuse me, to the Fed itself. But Trump, on the other hand, when he was in office, he was very active about his opinions and sharing his opinions about what he thought the Fed should do. If he were to be reelected, you could expect more of the same and expect him to push for a more accommodative policy than the Fed has been adopting lately. And I think that may be what could be causing a little bit of this lift. I don't know. I'm speculating. I'm not in anybody's head except my own, so you can take that or leave that. Suncor, here we are up here at about 38, so is building some nice momentum, crossing above the 20-day moving average. in the last 2 days, and oops. That means that I'm also, you know, in pretty good position on this one so far at 37. So about $1 above with building some momentum. It should, I expect, find some resistance, possibly a little bit below 39, so not far away, but more likely, I'm going to just go ahead and call it 39. If you kind of take the midpoint of all of this peak here, this here, and here, and looks like 39 is pretty strong resistance. So we'll see if it's able to keep rallying. If it can push above 39, then I think we're looking at possibly finding some momentum to retest 41, which is the high for the last year, the 52-week high. So Suncor will be interesting to see if it can keep that momentum going or not. Let's just play compare and pick up some check marks. I think Barry was going for a check mark just a little bit ago with your Tyson trades, and that's fine. There you go. But on Zion, or excuse me, not Zion. Sorry, Suncor. I sold the 37, brought in 60 cents on this one on Wednesday. Anybody else that also placed this trade? Barry got 50 on the 37 strike. Okay, well, then I guess Barry, here's the one that I gave you earlier, and then I get one. So that's kind of nice. All right. Let's shift the discussion a little bit. A lot of the stocks that you see me work with, kind of, they're doing okay, but I've taken a few more assignments lately, and that's although I've had pretty good liquidity and my position sizing has stayed really conservative. The truth is, taking more assignments starts to constrain your financial flexibility, right? You don't have as much cash available, and that sounds pretty bearish, and yet the S&P 500 just you know, seems to be intent on pushing to one high after another. It looks like we had the latest right around 5,500 last week and briefly touched above it today, but it's come back down a little bit below it. What do you think about broad market conditions right now? Let's get a little bit of discussion going on this one. Are we looking like do you think the market is just is really just kind of rebalancing, getting ready for the next high? What are some of your opinions?
I think we're gonna have a pullback
Okay.
probably this month. Well, it's the first of the month should be going up because that's the strongest part. Usually one of the months that has the strongest part in the beginning of the month. And then
Yeah.
at the end of July, it should start pulling back probably through September, at least typically of election years.
Okay.
That's my opinion.
Another interesting comment that I heard this morning on CNBC, I think it was, while I was prepping this morning, was that talking about summer stock market activity. A lot of people go on vacation. A lot of those are institutions. In the meantime, there's a lot of, they observed, that in many cases there's an increase in buying activity the early part of the summer, and that may be some of what we're seeing, because all of the institutions are out and retail investors are coming in, and they're basically the lion's share of the market right now. And so that may be a part of it. I am interested, though, to see, looking at, I've thrown up the Bollinger Bands here, because sometimes this is an interesting way to try to read the ebb and flow of trends. The blue line is just a simple measurement of the 20-day simple moving average in this case. So just like what you see on my normal green lines. When a stock is in a position to rally, typically what you will see will be something very much like this, where we'll see a bounce along the middle trend line. And it's usually a pretty good indication when a stock is tracing right along, or even moving a little bit above the Bollinger Bands, because that usually implies that the buying activity is still very healthy, and it usually means it's going to continue to extend that range. This period is a really good example of this, the early part of the year, where it just kind of kept staying right along the top of the Bollinger Band. Now it's retracing a little bit right now, sorry. It's retracing just a little bit right now. Or earlier in this week, I should say.
Is that I understand that they have that blackout period for institutions, for the buybacks, for the companies to buy back their own stock.
Right.
So, what you're seeing right now is what's being bought on the market, and not companies buying back their stock. Because sometimes, when the companies are buying their own stock, it looks like, there's a lot of buying, but right now you can take that out of the equation. So everything that's being bought now is from, either institutions or individuals and retail investors. So if it's still showing bullish with just the retail and institution investors, then it's really bullish. This market is really bullish.
Yeah, it is pretty bullish. We're seeing a little bit of consolidation right up here at the top. And it's a very narrow consolidation, but that is forcing the Bollinger Band to flatten a little bit. And that could be a leading indication that maybe we're due for a pullback. It's really interesting to think that the market has not had a retracement of 5% or more in almost 2 years, since 2022. That might sound strange, but it's actually accurate. Most of the pullbacks, where a lot of people started to get nervous, they're like this. 52.50 maybe down to 49.50. That's 300 points. That's not 5%. That's very modest. That's maybe about.
Well, and I expect a pullback before the push at the end of the year. So there's got to be another pullback like that one, at least, from that you showed.
Yeah, so we'll see where all of this comes out. But here we are, really since late 2022, we've been following a very strong upward overall movement. And even though this one extended for a period of months, right? In terms of actual size, 4,000 to 4,400. Well, okay, this one was about not quite 10%. So I got to take the 5% claim back. But but the even then, this is pretty modest overall, except for the length of time it took. And that set the stage really for, you know, a very solid move since then. So
That's what I'm expecting, something like that move last fall. At least,
and then,
in my opinion, it's got to pull back.
And thank you, Ray. I appreciate that. That's the other thing to remind people. Something like this, just because I put it in red, that doesn't mean it's bad. In fact, this kind of thing, this kind of a consolidation, this kind of a pullback in the midst of a longer upward trend, that's actually healthy.
And if you see the beginning of July, that was when it hit the highs. So about the
Right
mid,
there.
you know, somewhere in there. So the first week or two of July is typically strong, and then you start getting a pullback, and then you'll have a run probably maybe, I'm thinking right around election day or sometime just after that, it'll take off.
Here's this, and then down again. You know, it's the typical thing. I do think that in an election year, the idea of buying the rumor, selling the news becomes a lot more prevalent, especially if the candidates are as diametrically opposed to each other as Biden and Trump are. So again, whatever your political preference is, that's fine. That's just kind of the read that I've got right now. So okay. So that'll be interesting. We'll see how that shakes out. And one of the other reasons I wanted to bring this up is contrasted against you know, what we're doing with a lot of our put selling trades. You know, why is the market so strong when so many of the stocks we're paying attention to are just kind of meh at best? And don't get me wrong, that's not a complaint. I can do a lot with meh. Boring is good for the Rebel income system. I could do a lot with that. I like it when stocks are boring because it's really good for income generation, but it's a contrast against what the rest of the market is doing. So what's the explanation?
Well, you know, one of them is, I think, rotation is what I'm seeing, is that especially now that it looks like the Fed may start to pull back on interest rates, you know, that there may be some rotation into small caps. If you look at what's been, you know, keeping the market, it's only those companies. So really now you're finally starting to see pullbacks like in NVIDIA and some of the other top companies, and you're seeing people rotating some of those funds into the smaller companies. I think we're going to start seeing more of that.
And I think that is what accounts for a lot of the activity we've seen over the last week. Thank you, Ray. I appreciate that. But, you know,
and then, you know, when you're trading sometimes on the, you know, selling puts and whatever, you typically don't look at those smaller companies or whatever, because you're looking at the others. But
well, here's one of the things I wanted to highlight about. It's kind of the irony of tracking the indices right now is that there are $3 trillion companies now. NVIDIA, Apple, and Microsoft. For a while, Apple and Microsoft were the only two, and they kind of traded back and forth a little bit in terms of who was bigger. But last week or so, NVIDIA caught up with them, and in fact, I saw some commentary. I want to say late last week that NVIDIA's market cap had actually gone above both Microsoft and Apple. I think that's where people started to sell a little bit, is they saw an opportunity to go ahead and claim some of those profits, and they started taking them. But that caused an interesting thing to start happening, people starting to talk about seeing the indices having to possibly rebalance their weightings because a lot of those weightings are based on market cap, and so possibly having to move NVIDIA into a higher tier, and that increases the weighting with only 3 companies at that extremely high level. That increases the weighting in those 3 companies on the index, and so they start to have a disproportionate effect on the index, and that makes the broad market analysis a little bit trickier. And that's where I like what Ray was just saying about about small caps, because that's where sometimes you need to start paying attention to some of the others. And this is the Russell iShares. This is tied to the Russell 2000 index, and we can just go with the Russell 2000 itself. Give me a second. Yeah, RTY. And kind of see what that's doing as well. But sorry, I didn't have the, there we go, IWM, sorry. This is a good barometer for the Russell 2000 for what small caps are doing. And so they are starting to pick up some momentum. That could be setting up some other interesting opportunities in smaller companies as well. So we'll see if that rotation that you're talking about, Ray, continues from some of the big boys and the larger cap stocks into some of the smaller ones. But
yeah, I took a small position, well, about a half position that I typically take for my investment in one of the small cap ETFs. I took some VBK.
BVK?
No, Victor, Billy, Karen.
Oh, okay, there we go. Another one, okay. Comparable, isn't it? Yeah.
Yeah, so, I got assigned on that one at like 243 or something. So, it's starting to move back up. I've been waiting on there to be more signs that the interest rates would come down, but I think towards the end of the year, that one will pay off quite a bit.
Yeah, and it's breaking out of looks like it's poised to break out of a consolidation range right in this area where there's just a lot of a lot there. So this could be, and it's also moved above the 20-day moving average, which means technically speaking, this could be building some new momentum. We'll see, it is down today. If it uses the top of this consolidation range as support, and we see, say, starting on Monday, a little bit of a push higher here, this could push all the way up here. And that means that a lot of these small cap stocks are going to have some opportunities. So
yeah, I didn't want to do the research on all the small companies, so I just took the ETF.
If you have the ability to work with these, especially these are a little bit, some of these ETFs, especially if they're going to be tied to an index, you're going to see them be a little bit more expensive. $250, that might be a little bit restrictive for some accounts, but that does get, this is where some of these sector-based ETFs are pretty interesting. I keep a watch list of this mostly just so that I can keep a barometer of what sectors are moving in favor or out of favor relative to the S&P 500. But at the same time, some of these are really interesting trading opportunities too. You can buy these stocks, you can sell them just like any other stock, and you can work with options on most of them as well. And that may mean selling puts if you want, or if you want to go directional, you can do that as well. So there's a lot of different ways to work with the strategy. If you're talking about selling puts, the way that I want to do it, the way that I like to do it, there's certainly more than one way to approach it. And maybe working with the sector on a kind of diversifying the exposure a little bit, that might make some sense. That's not a bad thing at all. So thank you, Ray. All right. Well, I hope this has been useful today. As always, I really enjoy talking about this stuff, and not just reviewing my trades, but trying to get a look at what's going on in the broader market, and seeing what some of you are doing as well. I hope you have a wonderful weekend and a great holiday. Thank you, Randall. I'm going to enjoy my weekend as well. If you have any questions between now and then, as always, don't hesitate to reach out, thomas@investive.co. Let me know, and we'll talk again next week.
Happy trading, everyone.
Thanks, Ray. Thank you, everyone.